Hello, what's going on, traders? This is Chris at Virillo Trading. Welcome to today's video. In today's video, I'm going to explain to you a very typical pattern that I've noticed that occurs with traders. I've been a product of this pattern many times since I've started trading in the year 2018. So let's get to it right now. This video is called Why All Traders Are Circle Trading. You guys are all in a circle. Now, this is my own theory, so take it with a grain of salt, and I hope it helps some traders out there. I hope you guys can learn something from it. If you appreciate this content, let us know down below. This is Virillo Trading, and we help traders learn about the tools, problems, methods associated with trading. If you want to support this content, click the first link in the description. Very simple. Let's get to it right now. So picture this. You have this big circle right here, okay? Now, most traders, when they start off, they're at the top of the circle. The top, this is what I call the hammer and chisel phase, or the development stage of your trading. Now, we're going to get back to this, but this is the point where you will end up coming back to many times in your trading career. Now, we're going to go across the circle here to the next point, which is the point that I call the consistency phase. This is the phase where you're doing all right, you've done your development, and you've put your strategies to work a little bit, and you can see that things are going pretty well, and you're in the consistency phase. You're seeing some profit, you're seeing some progress, all that. Now, what happens is most traders don't stay in the consistency phase for very long. In fact, the market by design, this is my opinion, is meant for traders to not stay in the consistency phase because that's part of how the market operates. There's a constantly changing dynamic that forces traders out of the consistency phase into what I call the build-up phase, which is down here. And this is the phase where you're experiencing emotional buildup and there's a shift in the environment. Now, one thing I want to say is that it's not three perfect points. It's not like you're in the development and then you move to consistency and then you move to emotional buildup. It doesn't work like that. It's sort of a little bit of a spectrum. So you're always constantly shifting around the circle. You start in the development stage, you move slowly towards consistency, and you're pretty much there, but you're never totally at ultimate consistency because obviously in an environment of uncertainty, you don't really know what consistency means for your particular strategy because you may not have explored it deep enough yet that you know like what the strategy can totally yield on a very long-term basis. So what I mean is you're not really staying in the consistency phase. You're sort of shifting in and out of it, and you're going towards the bottom of the circle, which is the emotional buildup area. And in this area here, this is the danger zone. At the very bottom of the circle, this is where the market shifts. Your emotions build up, you experience a bit of euphoria and you're confident, and now you start sizing up a little more. What normally happens in this stage to new and experienced traders is they end up going full circle and they end up in what I call the mistake area. And this is the area where you give back months worth of progress in a couple trading days and you don't know why until you've come back and looked at it much, much later. Your goal at all costs, in my opinion, is that you need to learn how to reset the cycle back to the development stage before you get too far into the emotional buildup and the market is shifting stage. Or else you go far down the road and then you end up going full circle, which is you make mistakes, you give back profit, you lose your money, and then you realize that you need to go back to the drawing board at the very top of the circle, but it's too late because you already lost the money. So let me know if you guys have experienced that down below. Comment, please. Let me know what you think of that. The next thing is you just want to understand what you need to be doing so that you can stay in the circle and stay in the game and not go full circle. So the way that I see things is like this. The market, guys, by design is meant to do one thing: conduct as much business as possible. And the way that it conducts as much business as possible, you don't have to believe me, is that it moves in a way that it attracts traders to do business. And once the traders have done their business, guess what? All it does is it seeks out more business to transact. And that's why if you guys look at a market, if you have experience watching a market, you can see that they move in a very counterintuitive way. Sometimes it feels like you buy it, and as soon as you buy it, it goes against you. Or you sell it, and then it goes against you right away. If you study the market long enough, you can learn how to be more precise. When you do that, you're going to have competition. So emotions build up. You're doing okay. Now you're getting confident. You take more risk, or you start straying off your path. Something else in life distracts you, or the market changes and you're not adapting. You're just there because you want the rush. You're not there because you're managing a business professionally. You just want a bit of that gambling rush. So you end up going full circle. You reach a point where you're in the mistakes area. You have emotions controlling your decisions. You make a mistake. You give back all your progress, and then it's over. You've gone full circle. What it requires to reset the circle is two things: awareness that you're in the game, that you're in the circle, and you've reached a certain point in the circle, And number two, understanding your purpose of what you're here to do. Why are you trading in the first place? So let's dig deep on awareness first. So we have emotional awareness, which is awareness of your emotional state and the buildups that you have to this point. So when you experience winning trades, you gain confidence, you gain euphoria. Well, it's like the same when you hit a new personal record and something that you're trying to get better at. You feel accomplished. It's a good feeling. It's a feeling of gratification. You feel successful. The opposite of that is when you take a losing trade. You feel frustrated, angry, you're not totally sure, and you're just uncertain about what you're doing. The emotional buildup stage, that is the most dangerous stage. This is why I always tell traders, you need to adopt more of a data-driven mindset so that it minimizes the emotional impact, the emotional swings that you're going to experience when you're involved in a stressful performance activity like trading. Talking about being data-driven, it's just about tracking trade statistics, understanding where you have edge, and understanding which tools you're picking out of your toolbox to, put to work when it's time to put them to work. What that means is that you're having an awareness, a situational awareness, right? Let's say you're a hunter, you're a wolf, you're a gatherer. You know what your purpose is. It's to hunt and gather the food at all costs, and it's to not die. If you die, you lose the game. Thing is, in trading, you can't die. You just lose a bit of money and it's not that much of a problem, but you need to approach it from that sort of survival instinct if you want to play the game properly. A hardened trader, a trader who has experience, they know that they need to go back to the top of the circle, which is the drawing board, the hammer and chisel phase, and they need to prepare before they go out again and go for the hunt another time, because they're aware of the fact that the world they're in is constantly changing. The circumstances around what game they're playing and what they need to do, their purpose, is changing. They have no control over the bigger world that they're operating in. This is the difference between a trader who has a true purpose, which is to succeed and be consistent in the long term, versus a trader that's in it just for the short term. They want to make a bit of money. They want to show their friends that they made some money, and they want to just show off and fucking all for the clout. You know what I'm saying? What that is, in my opinion, is a high degree of understanding purpose of what it is you're there to do. And number two, which is situational and emotional awareness. Because without that, you don't know where you are on the circle. And if you don't know where you are in the game, you're going to end up playing the game till the end, and it's going to result in you losing, because that's what happens. When you play the game till the end, you lose. You give your money back to the market. All right, guys, thank you for watching this video. Click on this video right here to watch more awesome content, and a playlist down here if you want to see a playlist of videos like this. Thank you.